Excellent. Okay, I think everybody's here. We've used technology to bring Alain in from Paris. Thank you everybody for attending today. This is the keynote panel about gold. And really the title, and we had some interesting discussions in preparation for this, is why is the gold sector interesting from a value perspective? And what are the stock-specific drivers of returns in the industry? And we had a lot of interesting debate because we've got three very well-known, capable fund managers here who come at investing in the gold sector very differently. So maybe to start, I think if you could just give a brief intro on yourself and where you are and what you do, just sort of a minute or two, and then we can get into the discussion. Alain, do you want to start?
Yes, with great pleasure. We are managing a precious metal fund. It's a long-only equity fund. It's a fund that is probably one of the oldest French long-only equity fund investing in precious metals, because it has a 21-year mine life. And our mandate is to outperform a benchmark, obviously, and the benchmark is the FTSE Gold Mine Index. So for those who are not totally familiar with the FTSE Gold Mine Index, it's in a nutshell, it's the 30 biggest gold producers in the world. So we have a mandate to outperform the benchmark, but we also need to do it in a qualitative way, and this is exactly what we have been able to achieve over these years. So we did outperform the benchmark, and we did it with a lower volatility. And I think that volatility might come back in this panel discussion because we have different investment approaches, and hopefully will help our viewers understand the differences and how we can achieve indeed an outperformance.
Thank you, Alain. Patrick?
Yeah, thanks, Miranda. My name is Patrick Chidley, and I work for a couple of different small companies, 3PPB and 3PPM. The former is an advisor, and we help out both other companies, as also we advise on a fund who invests mainly in small cap gold stocks. And then we also have another company which is a private investment group that invests right at the beginning. We're looking for very, very early stage investments in mining, and one of those that we have, for example, is a private company. It's more venture capital that we do, so it's a private company investing in gold exploration in Finland, and we're on the lookout for other opportunities right at the beginning, working with some of the best people in the industry and looking for some of the best projects right at the early stage.
Thank you. Vincent?
Hello, I'm Vincent Benoit. I'm a partner at La Mancha Fund. I'm the Chief Investment Officer. In fact, La Mancha has several lives. It has started with the investment of the Savoy's family in 2012 that bought La Mancha from Arriva. From 12 to 15, La Mancha was operating mines in Australia, Sudan, and in Côte d'Ivoire. And in 15, we have chosen to roll our asset into listed entities and take some significant stake into Evolution and Endeavour. So in 15, La Mancha has became the holding company of the Savoy's family, so the investment vehicle in the mining. And more recently, we have chosen to change the status of La Mancha to move it to a fund. So since June 2021, this year, we have changed the structure, so we are now a fund open to different investors. The Savoy's family has 87% of the fund, and we have welcomed a strategic investor that have recently injected $100 million. So we are managing basically $1 billion in different assets. So we are gold focused, but we are opening as well practice into EV metals. So the objective of the fund is to diversify. For the moment, it's 100% gold, and we would like to move to a more diversified portfolio between gold and EV metals. We are very focused on Africa also for the moment, but we are going also to move and to do some investments outside of Africa. And we have few investments, so 4 investments at the moment, and we are going to diversify our investment to basically to 6 to 10 investments, right? And so the style of La Mancha is to be long-term and to be an active shareholder. So it means that we are taking stake that are between 20 and 30%. And we are asking for board representation. And the job of La Mancha is, of course, to work with the management team and support the management team to help them to achieve their growth plan.
Excellent, thank you. I think to start off and a panel on gold, we discussed about how the gold price impacts your view on investment. Obviously, Alain, you're a long fund, same with La Mancha. Patrick, you look at earlier stage companies. Can you just maybe just comment on the gold price, where you see it, and how that's going to impact your investment thesis? Patrick, do you want to start?
Yeah, well, gold is obviously very important to set the level, really. I think it's really the gold price at the moment is reasonably high, but the appetite for at least gold stocks across the board, I think, is relatively low. And we are seeing obviously some pretty low valuations in the sector, both with the larger companies and the smaller companies. And so gold price expectations are quite important, not just the current price, and I think there is an expectation amongst many people in the market that the gold price might go down as a result, obviously, of what's going on with the Fed and in terms of the tapering and potential interest rate increases. So I think stability is more important, though.
Yep.
I mean, I think it'd be, it's great to have a stable gold price that the market's comfortable with and isn't always looking forward into the abyss, which I think is kind of where we are at the moment in terms of the sentiment.
Yep.
And so, rather than the level of the gold price, it's more to me, and certainly in our business, we like to have high gold prices, but we really do like to have stable gold prices.
Great. And then, Alain, I think that speaks to your point about volatility. So what are your views on this?
Yes. There are so many things that we can say that we should say, and we don't have enough time.
Yeah.
So we're going to try to make it as compact as possible. First point, gold is cyclical. I will never repeat it enough. And gold mines are cyclical. The correlation between gold mines and gold is north of 80%. That's number one. Number two, 2020 was a year that saw gold go up within a cycle that started 6 years ago. We do believe that we are entering the second leg of this bull cycle that is going to last another few years. Now that I said that, 2021 will be probably called the transitory year. And by transitory I mean understanding that the two key words that are being used the most in the industry is tapering, because tapering, it's rates impact directly the price of gold and the US dollar. And since we know that rates and the US dollar have the strongest negative correlation with the price of gold, obviously we need to focus on these two issues. So gold did consolidate this year simply because the perception of tapering impacting rates and the US dollar in an environment with an inflation that was initially perceived as transitory would have implied an environment negative for the gold price. And this is why gold did consolidate. And then from tapering plus transitory inflation, we've had this tapering plus maybe not so transitory inflation. This equation is still not perfect for our gold price. So we need to move to the next phase, and the next phase is going to happen in 2022 after tapering. And if you look at the history, and this is the positive note, if you look at the history, at the end of each quantitative easing, I repeat it, at the end of each quantitative easing, rates went down. So our scenario is very, very simple. We are going through this transitory phase of trying to understand where rates are heading, how the US dollar is going to behave in this environment where there is inflation. But the reality is that when tapering ends, and it will end sooner rather than later, if we follow the minutes of the Fed, rates will go down. And this is when we'll have the entire boulevard ahead of us to invest in gold mines. So in the meantime, what are we doing? We are managing a fund that is flexible. And by flexibility, I mean that we can invest in producers, in explorers, in developers, in royalty companies, in large cap names, in small cap names. And when you are in an environment where you have headwinds against you, you definitely want to position the fund in a defensive mode. But when we believe that all the cards are in place to have a full aces, this is when we will increase our exposure to explorers, to developers, to companies that have a higher torque in a higher environment for the gold price.
Thank you, Alain.
Just quickly, I guess. So yes, gold price, I will start just with an anecdote, because when we invested and bought La Mancha in 2012 with the Savoy's family, gold price was around 1800. And so just after, you know what happened in April 13, so it went down to 1250, and we have lived with this gold price. And when I was desperate, I saw my shareholder and I say, life is going to be much more complex for us. What are we going to do? And he told me, you know, I'm not paying you for guessing what the gold price is. I'm paying you to operate the assets on a very cheap way and at the best cost you can, right? And this is what we did. And so in reality, La Mancha did about 18% return from 12 to 18, while the gold price was down 20%. So that proves that gold price, of course, or metal price is important, but is not as important as the quality of the asset and the turnaround you can do and the improvement you can do on the mines. So you can earn money even in an adverse environment. And so this is what we do in our approach. Generally, we use a long-term gold price, which is much lower than the spot, of course, like minis. At the moment, we are using 1600 sometimes. And we want to have a return from 15 to 20%. And that's the case of investment for us. Second thing also is that we are testing the resilience of a company to modify their OPEX or their CAPEX in an adverse environment, as we did when we were operating mines in La Mancha. So we clearly, and you've seen that, when the gold price was down, you've seen the all-in sustaining costs, the companies have reacted and have decreased their cost. As the gold price is increasing, you see also that the all-in sustaining cost is increasing. So this is what we have to do.
Thank you. I think you all pointed to diversity, creativity, flexibility in your fund, and being nimble in and around the gold price. I think what you also talked to, Vincent, is management. So we had a long discussion in preparation for this panel about how critical is management to your decision. I mean, they obviously run the company, but management and the board. I think, Patrick, we talked about that too. So Patrick, do you want to start?
Sure. Management's so important in making an investment in our sector, both in terms of large cap and small cap listed stocks, as well as in private companies as well. We like to choose people who are experienced, who are capable, flexible. As Alain says, it's good to be able to be responsive to changes in the markets, changes in the gold price. We like to work with really experienced people, and we tend to invest more in exploration because
Yep.
that's the smaller cap area and that's where we're focused.
Yep.
So we like to work with very experienced geologists who've got extremely good ideas and people with obviously good moral fiber, and so that's very, very key. And also you need to have and not just management, but you need to have a strong board. So you need to have independent people who think about it as shareholders and are careful with provide oversight to the management, and that's so key as well because so many companies sometimes just lose track a little bit and get focused on the wrong things, and that can waste a lot of time, a lot of money. So I mean, I think everybody really agrees that you've got to have great management, but it's sometimes a bit tricky to pick why, because there are different reasons. You've got technically capable people and you've got financially capable people, and you've also got some other areas that you really should be focused on as well, in terms of bringing on quality people that everybody can work together properly as well.
Yeah, a mining company is a complex ecosystem and projects are complex, right? So you have to be able to balance all the skill sets. Now, Vincent, you said you take an active, you look for board seats and you are active in the day-to-day sort of operations of the company. So
well, at the moment, I mean, in terms of a couple of investments, one we're very active, another one we're not so active. But I think from time to time we want to be more active, especially with the private companies.
Yes.
I mean, I thought the getting a team that can work together is so important as well. That they're all moving in the right direction, in the same direction. I think is quite key, because you also don't want to waste a lot of time arguing about the direction of the company. You know what I mean? So.
And Vincent, your experience as you take a you active board seat and.
But we all agree that management is key in many sectors, not only in mining, but good management is key. And in mining, of course, a good management with an average portfolio of mine will get better return than an average management with a good portfolio of mine generally. So management is really one of our top criterion. We, of course, do a lot of due diligence on the management before investing. So we are doing a lot of checks in order to check the background, the performance of the management that we are backing with our financing. But not only the top executive, you need, of course, a very good top executive team, but you need also to make the checks on the key people. For example, the guy that is on a project investment, the project manager, the one that is really going to spend the money, you need really to see what he has done in the past, not only by quotes, but only by checking that he has delivered project on time, on budget. So that's diligence that we are doing regularly before investing. What else to say on the management? Of course, the last, as we are active, of course, the last duty of an active shareholder, not an activist because we're not at all activists, but to support and to really make the growth story happen is to make sometimes some adjustments. And so sometimes you have to say at the board level that some people are not performing as expected, or they should move, or they should do something else. And we have done that in the different investment we did so far.
Okay. And Alain, to you on due diligence and also to further expand that on jurisdictional risk, because you've got Mancha, who's primarily focused on Africa, Patrick and his team, look globally. Can you comment on that, Alain, on your due diligence?
Yes, absolutely. Yes, I mean, I can give you a lot of anecdotes of us investing in companies that were in a special situation or a turnaround phase, a sort of turnaround phase that wasn't convincing, but with significant shareholders owning a significant share of the company. And by exchanging with those shareholders, we many times understand the end game. So my point here is to say you need you need the right people, of course, but you need them to be honest. And by honest, I mean have a straightforward story to tell. And when the story is not straightforward, it needs a lot of time, it needs a lot of attention. It's like a high maintenance or low maintenance company. We do have in the portfolio high maintenance companies. We do, but it's because the expected reward is much higher than for low maintenance companies. So it's not, there is no simple recipe. There is no simple recipe. But the reality is that you definitely need to understand who is leading in a company and what is the objective. And if that plan A doesn't work, you need to know that this management has the capacity to rebound. So that's what I call an adaptive mobility. So we need management to have an adaptive mobility.
Yep. Thank you, Alain. And maybe we want to talk a bit about jurisdiction and risk and how you create value out of your investment. Vincent, I mean, you focus primarily in Africa. Can you talk a little bit about that?
But on the jurisdiction, yes, we do also a lot of work because we are not investing in some countries, of course. Of course, in a region where OFAC countries and so, of course, it's banished, but we do invest in countries that we understand. And when we have eventually some support, for example, we feel comfortable in Africa, of course, in North America, but in Latin, but in some countries in Latin, because we know that in those countries, if something happens, the group has some network, some relation, and we can eventually get some support in different stages. So that's very important that we have a very good understanding of the country before investing. But we don't share the same view of many investors about the risk in the jurisdiction. For example, Africa, they don't have the same kind of risk, but in so-called safe jurisdiction, there is also a lot of risk. For example, permitting, of course, it's obvious that in many countries, and because of the association, because of ONGs and so on, you may be blocked because of some recourse or because of some actions to get the permitting, while at the beginning, when you make your due diligence, it's obvious or very straightforward. At the opposite, in Africa, Western Africa, that we know very well, country needs investment, so the permitting risk is less, right? Of course, in Africa, you have the security issues that we are dealing with and that we are assessing in very much details that we don't have, of course, in so-called safe jurisdictions. So clearly, again, we do a very deep work to assess the countries before investing, but we don't have, we do not follow, let's say, the surveys or the risk surveys that we can see. We do our own assessment.
So we're talking about how do you create value in complex jurisdictions with complex projects, right? Patrick, I think we also talked about, you just alluded to this, Vincent, is that you can have a safe jurisdiction, for example, like Canada, but you've got different structures in each province. You have permitting, you have First Nations, you have environmental, you have social, you have governance that you'll have to manage. So what is perceived as safe may not necessarily, you will always have issues to deal with. So I also wanted to leap in because this caused a bit of a solid discussion in our program, was the discussion around ESG. And Alain, I think you had some interesting views and very good points about how we look at ESG, how do we create value for your investments and within the context of ESG. Do you want to start off?
Yes. Let's start with the reality. The reality is that our shareholders are asking questions, and they want to know if we incorporate in our investment thesis the notion of ESG and how it impacts our investment strategy. That's the reality. Second point, ESG for 3 letters. And a very good friend of mine used to say, mining companies, don't force children to go and work in mines. Mining companies are forcing children to go to school. So the notion of the S and the G for me is granted. We don't even have to discuss it because it's not a subject in itself. Mining companies have been behaving at the top level on those two fronts for decades. Whether they did it because they wanted to do it, because this was the right thing to do, or because they had to do it is another discussion. But that's the reality. The biggest issue here is about the E, the environment. And mining companies usually don't rank very well on this front. And what this industry needs is to set some norms. And today we don't have norms. We have many agencies who are ranking and rating those companies on almost the same criteria, but coming up with different conclusions. So one single company could have several different ratings based on the agency they hire. So that's why I'm very reluctant to start really talking about the GHG emissions in this case for the mining industry in general and gold mines in general, because as long as we don't have a norm, we will not be able to efficiently discuss this subject, and the industry is working on it. It's not like there's a big ocean that separates the achievement of this objective and where we're starting. But we need a norm, and we don't have it. We haven't had it yet. It's just a question of time.
Thank you, Alain. Patrick, do you want to weigh in?
I definitely think that this is a key topic for investors because, like Alain says, I mean, the people investors aren't going to give him money unless he's ticking all the right boxes, and we've seen that with a number of different funds, and that then is relayed to the management teams of mining companies, and then they are all saying, well, yeah, we're going to tick all these boxes. But I do think that Alain's point about the social aspects, that mining is really has been led a sort of a very important. They spearhead the investment into very poor countries sometimes, and they generate wealth, and a lot of that wealth stays in the country. And does lead to development in the country, much more sustainable development than just say, shipping off bags of corn to help people who are starving. So the mining industry has played a huge role in many countries across the world in terms of creating those areas of business activity which wasn't there previously. And I say that you've got the E in the S and the G, and you have to obviously pay attention to all of them, but the social aspects can often outweigh the environmental negatives. Yeah. And I think that's key for people who are creating benchmarks and discussing this subject to really tackle, because the social gains are much more important than what the perceived environmental negatives are of, say, gold mining.
Yeah. Thank you.
Still have 1 minute to say that ESG, of course, is for me it's consubstantial to the mine. So unlike other sectors, ESG is really completely linked. The performance in ESG is linked with the good performance of the mine. If you are not good in those E and S, at least, you cannot be good in managing a mine efficiently. And sometimes it's quite unfair because mining has a bad image, for sure, in many places, but miners are doing a lot in reality. And so, yes, as an investor, we are paying, of course, a lot of attention to ESG. But what is important for us is really to have a first assessment with no fatal flaws, right? No red flag. If we have average things, okay, you have good and bad. But what is important as an investor, and during a 3 or 5 years period, is to move the company from a certain position to a progress, to another one. And so what we are defining is a plan of progress for ESG. So I don't have time to develop that, but that's, I think, the most important for investors.
Well, and that's a good endpoint. We have a few minutes here for some questions. Thank you all, Alain, Vincent, and Patrick, for your insight. But if there's any questions, the panelists, I'm sure, will be happy to answer. Oh, it's not on. Sorry.
I hear you. Yes, first mover out of gold because Horizonte is a mine it's a project, so mines to be built. So we like to finance again projects. We like also what we like at Horizonte is of course why nickel is because nickel is something absolutely necessary for batteries, as you know, and we have a view on that and a long-term view on, of course, nickel-based batteries. Second is because we think the asset is very good in stage 1. We are financing only the stage 1, but there is stage 2, and there is also another mines that we can develop further. So for us, it's not only one mine, there is some optionalities and growth behind. And lastly, of course, we come back to the question about management. We do like the management. We have done a very deep assessment of this team, the way they have developed the project. It has been very good. So clearly, good asset, good management, we hope good returns.
Thank you. Any other questions? That's it. Thank you, Vincent. Thank you, Patrick. Thank you, Alain, for your.
Thank you, Miranda. Thank you all.
Good to see you, and thank you all for attending. Have a good day.